Mortgage ಅಂತ ಕಳಿಸ್ಬೇಕಾ ಹಿಂಗೆ ಇದೆಯಾ? ಇನ್ನು ಕೆಳಗಡೆ ಕೆಳಗಡೆ ಫುಲ್ ಡೌನ್ ಝೂಮ್ ಮಾಡಿ ಕೆಳಗಡೆ ಬಾರಿ. ಇಲ್ಲ ಇಲ್ಲ ಅದೇ ಕಂಟಿನ್ಯೂ ಇದಾಗಿದೆ ಅಲ್ವಾ? ಓಕೆ. So we were discussing about the, hello, is it audible?
Yes, sir. It is audible.
Yes, sir.
Audible.
Okay.
Visible, sir. We can't.
Okay, now it's okay.
Yes, sir. Okay, sir.
Okay. A reverse mortgage is the exact opposite of the normal mortgage. In the normal mortgage, we are going to pledge it as a collateral security for the purpose of obtaining the loan. But in the reverse mortgage, what you see is your equity is going to increase as you are going to borrow more and more from the bank. The banker's equity will increase, whereas the owner's equity will come down because your principal amount, what you have borrowed, plus the interest accumulated on the borrowed money will going to rise up. And that's why the equity of the owner is going to come down. So in a normal mortgage transaction, banks and home finance companies have to consider the borrower's income. But here we don't ask. In the normal housing process loan, you ask for where you are working, who is your employer, bring the salary certificate and all those things. But in the case of this particular RML, you don't ask about the repayment because everything will be taken up when the legal heir comes or the successor will come and ask for that particular amount to be repaid. However, in a reverse mortgage, it is very popular in US. It is says that a lender, instead of paying upfront, pays the borrower a sum every month. So every month you are going to receive the money. So in America, it is called as home equity conversion mortgage. Providers are banks and specialized reverse mortgage finance companies. In Canada, both banks and insurance companies have collided.
Sir, this will be discussed, sir. I think this will be discussed.
Next we go for the longevity, that the low mortality has come down, rising cost of the medical health care, and you have the no proper social security system. You depend upon the RML, biggest savings, and it is asset, and at the same time wealth creation, and it is going to increase the residential price property value also. So next we go for RML seeks to monetize the house as an asset, and specifically the owner's equity in the house. So you want to have more equity, you have to borrow less. You want to have the less equity, then you can go for more the banker. Senior citizen borrowers mortgage the house property to a public lending institution, that is PLI, who then makes periodic payments to borrowers during the latter's lifetime. The SCB not required to service the loan because principal in interest you can repay at the end. On the death of the borrower, the legal has to go and he has to sit before the banker and he has to look into the process. If he wants that particular house property to be mortgage, to be registered in his name, then he has to clear off the principal amount and the interest amount. If he is not ready, then the house is going to be auctioned, and whatever the money that is due to the banker will be taken back by the banker, and the remaining amount will be given to the legal heir. This is very simple. And senior citizen borrowers, heirs can repay the loan with interest in the middle time. Mortgage and out property can be released. It has been published in the Union Budget 2007-8, May 31st, 2007. The National Housing Board has given the guidelines. The eligibility is the 60 years and age. Married couples can also borrow. So all these things we have discussed. And we have discussed the market value of the residential property. more value of the mortgage loan you are going to get when you are there in the 60 to 65 age bracket. When you are more than 75 years, you are going to get the maximum reverse mortgage loan. And the above table is indicative of that. And the banks and the public lending institutions have the discretion. Methodology to be adopted is to be disclosed. And we see that the equity value is going to be taken into proportion as the value of the residential property which you are going to mortgage for the purpose of getting the RML. And public lending institution have to revalue the mortgage property, and on the revalue of the asset, you can get the more reverse mortgage loan also, because always in a country like ours, inflationary tint will be there, and the residential house property hike will be there. And you can repay the money in the monthly, quarterly, half-yearly or annually. And it is to be decided with the banker how you are going to repay the amount, whether you want to pay, how much you want to pay in the middle, whether it is half-yearly, quarterly, monthly, and all those things. Lump sum payment is also to be done in one or more tranches. Committed line of credit will be there. Both the borrower and the public lending institution is going to be there. Our lump sum payment may be conditional and limited to the medical exigencies, home improvement, alteration, renovation, upgradation, extension, maintenance of the house property. Option is given to the senior citizen borrower. Eligible end use of the funds can be used for upgradation, renovation, extension, home improvement, maintenance, insurance of residential property can be taken up. It can also be used for the medical emergency expenditure of the family, for supplementing the pension. Repayment of an existing loan can also be done, meeting any other genuine need, but it is not allowable for the speculative terms. So period of loan, it is given for the maximum period of 15 years only. That is the guideline in India. Interest rate, it is going to be fixed by the public lending institution. It changes over a period of time as per the RBI guidelines. Security mortgage of the residential property will be done. Without mortgage of the residential property, no mortgage loan is going to be given to you. And commercial property is not eligible, because commercial property means lot of rental supply of the income will be there. So residential complexes, commercial property is not considered. And valuation will be as per the local laws. For example, you have how much is the square feet value, what is the value in a particular locality, and all those things. And it is going to be assessed by the appraisers who are going to be there in the bank panel list. They are all SBI or some other bank approved valuers will be there. And revaluation is going to be carried out every 5 years. Best commercial judgment is going to be there. No future values they are going to take into consideration. And the right to rescission, how it can be taken back by the banker. Public lending institution can maintain first customer friendly gesture, and they have to follow the international best practices. And senior citizen borrowers to be given 3 days time after finalization of the RML to cancel transaction. So 3 days time will be given, whether you want to take the SCBs, the RML or not. Within that 3 days, you have to tell us whether you want to go for it or not. Say yes or no within 3 days relating to the RML acceptance. And every even amount is disbursed may be repaid. Whatever the amount that is going to be repaid to you, it can be repaid to the banker if you don't want it. And interest for the period may be paid. That possibility is also going to be there. RM loan disbursement will be there direct to the borrower, except in case of adjustment for existing debt. For example, if you have borrowed in Canara Bank, some 25,000 is there. Then out of the 5 lakh rupees that you are going to borrow from State Bank of India, 25,000 first Canara Bank will be repaid, and the balance of 4,75,000 will be given to you. Like that, the adjustments can be done. Payment to contractor, any amount that you want to pay to the contractor for the extension or for the renovation, alteration of the house, or taxes that you want to pay to the municipal corporations, or the insurance premium that is due, that is all going to be adjusted. Settlement of dues to the other PLI is also going to be done. Periodicity may be monthly, quarterly, yearly, or half yearly. PLI to decide mode of payment and all those things. How you can closure the RML account? PLI is to provide in writing a fair and complete package of RML. So the public lending institution will tell the package as to how they go about all these things, RML procedures, and the whatever the documents they require and all those things. Similar when we do the housing loan now, when we borrow, the same procedure will be borrowed, because all legal documents will be taken by that particular SCBs. And the next one will be a toolkit with illustrations will be prepared. The bank manager will tell, if you take so much of package amount now, the monthly equated monthly installment will be so much. If you borrow 5 lakh, 20,000 will be given. Or if you borrow 10 lakhs, your amount will be 40,000. If you take a RML of 25 lakhs, you are going to be given 16,000, something like permutation and combination, they are going to work out. That depends upon, once again, how long that particular person is going to live. That depends upon the medical fitness of that particular borrower or the SCB. And this can be done. And there are certain charges like appraisal fees, inspection fees, verification charges by external firms, title examination fees, legal charges, stamp duty, registration charges, property survey, and valuation charges all are going to be incurred by the bank, and it is to be repaid by the SCBs. Settlement of the RML loan is going to be undertaken. Loan becomes due and payable only when the last surviving borrower dies or would like to sell the home. The option will be given whether you want to take back the money or you want to take the property. If you want to take the property, settle all the principal and the interest amount. If you don't want to take the property, then give the option for us to sell it in the open market, and the remaining amount will be, if any excess amount after taking the principal and the interest amount that is due to the banker will be given to the legal aid. And the next one is amounts to include accumulated interest also, quite obviously. And SCBs may settle dues without sale of asset also. If I have got enough money with me, disposable income, I can straight away go to my bank with my will paper that my father has given to me this particular property on which he has taken the RML. I want to settle all your principal and interest amount. He can pay to the bank and he can take a NOC, go to the sub-registrar office and see that the property is going to be registered to your name. And the SCBs may settle the dues also if they have the disposable income. This amount of time, say up to 2 months, will be provided to settle the RML dues. RML dues. So, madam, and hello, hello. ಹೇಳಿ madam. ಆಯ್ತು, ಇದು ನೋ ಪ್ರಾಬ್ಲಮ್. ನಾವು ಕಂಟಿನ್ಯೂ ಮಾಡ್ತಾ ಇದೀವಿ ಬಿಡಿ, ಏನ್ ತೊಂದರೆ ಇಲ್ಲ. ಓಕೆ ಓಕೆ, ಥ್ಯಾಂಕ್ ಯು ಮೇಡಮ್. ಹೊರಗಡೆ ಹೋಗಿ ಮೇಡಮ್ ಕಂಟಿನ್ಯೂ ಮಾಡ್ತಾ ಇದ್ದಾರೆ. ಸೊ ಬ್ಯಾಲೆನ್ಸ್ ಸರ್ಪ್ಲಸ್ ಅಮೌಂಟ್ ಆಫ್ಟರ್ ಸೆಟಲ್ಮೆಂಟ್ ಆಫ್ ಲೋನ್ ಬಿ ಪಾಸ್ಡ್ ಆನ್ ಟು ದಿ ಎಸ್ಟೇಟ್. Passed on to the estate of the borrower, that can also be done. So the next one, we take into consideration the repayment of the RML loan. Borrower will have option to prepay the RML at any point of time to the banker, and there will not be any prepayment levy. They will not charge you any, as per the guidelines now, they are not going to charge any levy or the penalty for the prepayment of the amount that you have borrowed. So RML loan covenants, number one, you take into consideration, senior citizen borrower will continue to use the property, and a non-recourse guarantee, no negative equity. SCB will never owe more than net realizable value of the property. They will not take even a single rupee extra. Whatever that is due for the banker, that much amount only they will take. Excess amount they will repay for the SCBs. You need not have any negative this one about those particular thing. Loan agreement to be entered into, and the SCB shall not make any testamentary will disposition of the property during loan is due. So whatever the loan is due, then it is not going to be auctioned. Only after taking the concurrence or the acceptance from the SCB that I am not ready to repay the money, the amount is very bulk, very FT, I can't repay, I don't have the income source, then the option is given to the banker to sell it in the open market and adjust the amount. And even if done, it is subject to the mortgage, whatever the things that are going to be there in the agreement that is being covered. The public lending institution may obtain a registered will, and such will is the last will for availing the RML, and that no other will be made again. And SCB to ensure property against fire, earthquake, and other calamities, that is going to be done. The SCB has to pay all corporation taxes, water charges, electricity charges, and all other statutory payments. And the SCB has to maintain the property in good condition. It should be painted, and whatever the things that is to be done for the good appearance of the building, that is to be done. And the PLI reserves the right to inspect the property. The bank will come and ask. And what about the foreclosure? Public lending institution foreclose the RML for defaults. If you don't obey whatever the guidelines that is there as per the National Housing Board, then it is going to be closure. They will not pay any amount due to the SCB. or if SEB has not stayed for 1 year period, 1 year round, if that particular person is not staying in the property which is being mortgaged, then the reverse mortgage is not good, option is not available for them. And if SEB fails to pay taxes or maintain, suppose the corporation tax is not being paid by the SEB, corporation tax, whatever that is paid, you have to give it to the banker or the other, whatever the statutory insurance property, the amount, the premium and all those things you have to repay. And if SEB declares that I am bankrupt, I am insolvent, then immediately foreclosure of the RML is going to be done, because the notice will come to the banker. If he is availing any RML facility, then he has gone bankrupt and he has become insolvent. And if property is donated or abandoned, no, that cannot be done during the process, because the house has been mortgaged in the name of the bank or the public lending institutions. And if ownership changes, rented out, no, you can't rent out the RML property, because you have to stay in that. That is the major condition in the RML, because the owner should live in the property where he is given for the RML. And in case of fraud or misrepresentation, you have to face the all problems that is going to be encountered. And any statutory action taken by the government for taking over the property for public use or for condemning the assets and all those things, that will be a legal this one. Then how to adjust the payment for the option that is given. You can repay the money, and every 5 years the revaluation is going to be done. When the revaluation is done, the amount of the inflation that has raised up, you can see that the RML is going to be adjusted to that extent. And borrower is given option to accept above or not. They will ask you whether you want, or you can go and ask the banker that I want because the property rate has gone up in my locality, and you can avail more RML, this one. If not acceptable, further payments will be stopped by the public lending institution. Amount outstanding will attract interest at agreed rates. And counseling and information to the borrowers, how at the outset, it is like a counseling only. Like in the hospitals, they will do the counseling. No, these are the things that are to be done. Medication is to be done. Surgery is to be done. The family members will be called by the doctors and they will counsel. No, in the same process, the bank manager will ask the wife and his son or the daughter, and the counseling is going to be done to what extent they have to borrow, and they have to maintain and observe the guidelines that are being given by the National Housing Board, and to disclose all terms without ambiguity. They have to disclose all the information, and they have to explain clearly all the terms and conditions, rate of interest, how much they are going to get, and whatever they want to give the information for the relatives who are being nominated as the legalized for this particular property for the succession purposes in the legal matters. And if possible, they will look into the counseling, and whatever the interest changes, all those things are to be given. And they have to think about the prices that is going to be changed, what is the value and all those things that is going to be a negotiable thing, and to specify all the costs associated with the RML, and to take all possible steps to treat SEBs fairly, because you have to see almost they are all retired employees and they are all very aged people. You have to see that as per the law, whatever that is there, as per the guidelines of the RBI, as per the guidelines, whatever the statutory things that are there on the law in the land where this particular thing is going to be done, you have to treat the SEB, senior citizen borrowers, fairly. That is the end of it. And you have the illustrations that are going to be given. At the age of 65 years, if a particular person, house property is assessed at 40 lakhs, and his period of eligibility is 15 years, that is 180 months, and the eligible amount is going to be 40% of the market value. So 40 lakhs, 40% means 24 lakhs. It comes to 16 lakhs. So 16 lakhs you have to take. That is the RML. 8,000 rupees you are going to get every month, up to 16 lakhs that you are going to cover. Once again, after 5 years, the property is going to be revalued, and whatever the extra amount, that is going to be adjusted. So rate of percentage, it is depends upon whether you want fixed or floating, because the banker will give the option for us, no, when you go for the housing loan. Similarly, here also option is given for the person who is going to borrow. And the total principal amount received is 14.40 lakhs. Illustration. So you have to pay. Assumption, no effect of changes in value of property during pendency of the loan period. So this is going to be an illustration. And illustration number 2, 14.40 lakhs you have borrowed, compounded annually. The amount that you have to repay will come to 21.38 lakhs after 15 years. Then what happens? You have to pay more than 9.98 lakhs in the form of the interest. 14.40 you borrowed, you have to repay 21.38. That means to say you have to repay roughly around 9.98 lakhs. So 9.98 lakhs, total amount due to bank will become to 14 plus 21, 35.78 lakhs. See observe the values. 35.78 lakhs for the amount that you have borrowed for 14.40 lakhs for a period of 15 years, because you are getting 8,000 every month. No, so this is the compounded amount. If SEB dies, if casualty applies, at the end of the 15 years, bank will sell the house and realize the due amount, and whatever the balance that is there, that they will give it to the legal heirs in whose name the death will has been written. And if legal heirs want to retain the property, he has to repay all the 35.78 lakhs and he has to complete all the legal formalities, and the property is going to be registered in his name. So RML in India, how the things are going to work out in India, this is very much important. October 18, 2004, why we need reverse mortgage, an article has appeared by, it is written by Y.B. Jagannathan. In August 31st, 2006, Diwan Housing Finance Limited introduced RML scheme by name Saksham. Saksham is the Diwan Housing Finance Limited introduced. No more Dena Bank is there. February 8, 2007, Excel Dynamics, India Reverse Soft, they had gone for. In February 28, 2007, in the Finance Minister's 2007-8 budget speech, RML reverse mortgage has been taken up. February 2007, National House Bank prepares draft guidelines of reverse mortgage scheme in India, how it is to be operated, what is the guideline, what is the procedure, what is the documentation from the banker's point of view, what is the interest rate, who are the players in the reverse mortgage, everything has been mentioned in the guidelines. And April 14, 2007, Punjab National Bank, first public sector bank in India, announced the reverse mortgage scheme by the name Bhagwan. Bhagwan was the reverse mortgage scheme. May 2007, next month in National Housing Board, the guidelines revised the things. And in June 5, 2007, ICICI, Bank of Baroda and Oriental Bank of Commerce offered RML schemes in India, and Allahabad Bank, Indian Bank, Corporation Bank, they also started the RML scheme offering to their customers who come in need of the RML in India. June 15th, 2007, LIC Housing Finance Limited also started the reverse mortgage scheme. And June 19, 2007, Nucleus Software announces new software for the purpose of RML, or what will be the longevity period, how much money is to be paid, what will be the interest amount accumulated, how much the SCB will be required to pay at the end of the 15th year or 10th year or 8th year, as the case may be. Into July 30th, 2007, Union Bank of India also launched the RML scheme. And July 31st, 2011, operational guidelines were given by the National Housing Bank to all the public priority lending institutions in India. And October 12, 2007, State Bank of India announced the RML scheme. And November 1st, 2007, Central Bank of India also launched the RML scheme in India. And we see that the references for this I have taken from these particular websites. Okay, this is the end of the reverse mortgage scheme in India. In the next session, I am going to deal with the bank assurance. Whatever the questions the participants wants to ask, I will reserve 15 minutes at the end. Okay, is it okay?
Okay,
Hello?
sir.
Yes, sir. Yes, sir.
We'll go to the next slide because time is less. We have to cover the bank assurance. We will go further, discuss about it, deliberate, and let's go for the question and answer at the end of this particular session. Bank assurance. So bank assurance, you know, as you know, this is not a new word for the people who are there in commerce and management issue, because it is a very well-known term. Bank assurance means it is the integration of the banks and the insurance sector. So what you are going to do, what synergy is going to be created? Synergy in the normal parlance, we say 2 plus 2 is equal to 4. But 2 plus 2 is equal to 5. That is the synergy point of view. That means to say, when the banks are being used for the purpose of selling the insurance products, synergy is going to come out. So bank assurance is the convergence of banking and insurance sector. It was developed in Europe first, Then it spread to Asian countries, Singapore, Taiwan, and Hong Kong are ahead. It is very common in the Taiwan, Hong Kong, and Singapore, but it is something, a new thing. And we see in Asia, these things have become very popular. Bank assurance with India and China taking tentative steps to do how the focus is to be done. This particular bank insurance originated in France way back in 1980s, 40 years old, but spread rapidly across the Europe in the countries like Great Britain, Germany, Yugoslavia, Bulgaria, Czechoslovakia, and other European countries. It was introduced in India in 1999, opening up of the insurance industry. You know, after 1991, we had a lot of development in our financial sector, insurance sector, foreign direct investment, banking sector, foreign direct investment. Lot of investment were there from the foreign people also, and our banking and insurance sector is being opened up for that. 20 new companies emerged in the insurance industry, and pressures on the banking sector mounted up like anything, because ours is the biggest banking sector in the world, and we have so much of customers and all those things, and we have to have a very big data, and our servers, you see that these things are going to be very problematic when you go for the internet banking and all those things, because so many customers are there and their data is to be protected and it is to be retrieved if any problem is going to be there. Sometimes when you go to the banks, they say server problem is there, sir. You can't go for RTGS or NEFT or something like that, because we are in the initial stages, all these things there. When the technology improves, all these things are going to disappear. For the time being, we have to see that the banking sector is going to be mounted up with the pressure, because they have to sell the products of the insurance company. You know how lethargic our banking people are there. If you go and ask them, they will say, sir, I want to deposit money. They say, go and deposit the money in the machine. If you want to borrow money, if there is some problem, you don't get the money in the ATM, you go and ask in the counter in the banks, then they will say something, it will get reversed in another 2 or 3 days. Something they will be telling, because you do phone pay. Sometimes you are given wrong this one. Then they will say, wait for another 3 days or something like that. They will be saying. These things are going to be common because we are in the initial steps. And we have to see that why pressures are there in the banking sector means, because today banking sector is in doldrums. Because how long you can wait the public sector banks to get the protection. So more private sector banks are there and they are all doing well. Most of our private sector companies, people, especially software engineers and other people, they have opened up the bank in the private sector, especially in ICICI, HSBC, Centurion Bank, Greenlace Bank, and all those things. And only we government people look into the public sector institutions like State Bank of India, Canara Bank, Syndicate Bank, or South Indian Bank, or something like that. Because we see that the things are very much high in the competition is very high in the banking sector, and the banking sector, they are facing a lot of problem because appointments are not taking place in a due course of time. And wherever you go and ask any particular clerk or any cashier, they will say, sir, we will be working up to 8:30 in the branches. Where is the time for us? So you see that you have to wait for the response that is to be given by the bankers, and you are not happy with as to how the banking people are working, and we have to adjust with that, because customer retention happens to be the very important thing. Because if the banker answers in a different manner, we close the account there, go and open the account in some other bank. That is the panacea for us as customers. So you have to look into that. The banker should also be very having soft corner for the customers with whom they are going to have the transactions. Staff retention becomes very much important because most often banking is the more vulnerable sector, and more number of transfers are going to be there from one particular branches to another particular branches. It is not like our teaching community, because if one particular person gets transferred, you will be there in one college for at least 8 to 10 years. But that is not the case in the customers where the bankers are going to be there. Most oftenly, they are going to be disturbed and they will be sent on promotion, and they have to accept the promotion, and the promotion will be for a different places. And motivation is very much important. Universal banking in 2008 or 2010, I was receiving lot of applications. People used to say, sir, in banking sector, it is too much pressure. We can't work like earlier time because this online operations and computerization has taken up. We are not in a position to cope up. The bank staffs have not been recruited. So we want to resign for the bank jobs. And we want to get into teaching staff job, they used to say. Most of the people who have done MBA and all those things, they used to say, sir, we will work as teachers and not as bankers in the bank, because they were thinking that bank teaching job is more lucrative. And universal banking, you see, approaches to providing all financial products under one roof. So everything they want to sell under one particular roof. A broad relationship approach is being taken into consideration. Now, today you speak about the core banking and all those things. NEFT, RTGS, when you want to go for large amount of the money that is to be transferred from one person to another person, you go for RTGS. Or when it is a small amount, you go for NEFT. Today, you have a lot of facilities, PhonePe and other applications have come up. SBI, Cash is there for the transfer and all those things. So we make utilization of the online or the internet banking. And now this the existing staff, they have to cope up with this all these procedures. Optimum utilization of the infrastructure and resources is the need of the hour. Maximize your relations with the banker. And even the insurance sector is also facing a lot of problem, because in our country, when you take 140 crores or 120 crores as the population size, we see not even 10% or not even 2 to 3% of the people are being insured. They have not taken up any type of the insurance at all. And kudos to whatever the development that has been done under the Pradhan Mantri Jan Dhan Yojana, or with regard to the Pradhan Mantri Suraksha Bima Yojana for the accident insurance and all those things. If people are going to pay at least 12 rupees under Pradhan Mantri Suraksha Yojana, they are going to get a life coverage for the accident purpose up to 2 lakh rupees. So earlier this provision was not made. Now this has been done. Today, the insurance sector also, lot of developments are taking place. You have to sell all the products of the insurance. And when we see the insurance people, we don't take it in the right spirit. We see that the insurance agents are going to create a lot of problem. And doing insurance itself is a waste now. Why we consider taking the insurance as a very waste now? Because it is because of the development that has taken place in the medical technology, because the longevity of the people have gone up like anything. People are telling up here and there, this insurance is going to be a waste one, unless until something happens for the human life, this insurance amount is going to be a waste. The people, the younger generation are of that particular thing. And the insurance companies have also understood the mentality of the youngsters. They say insurance of only for the government employees and public sector. They will be saying that hello, you see that the youngsters are going to say that this particular amount that is going to be credited for the insurance company will be making profit out of the money that we are investing, and we are not getting the returns properly. They will be under that particular confusion, because only when something happens for the person, the insurance comes into picture. Otherwise, it is of no use. People will say, I am paying so much of insurance money. So the government, the insurance companies, they have gone for the annual premium. Every month they will not collect. They will ask you to pay at the end. And we people have also started calculating, why should I pay every month? If I pay 2,000 rupees every month, 24,000 rupees is going to be accumulated in the account of insurance company. Let that 24,000 rupees be in my account. I will get the interest on that and I will pay annual premium. Why should I pay a monthly premium? This particular calculation is going to be taken up. And the next important thing is access to high quality customer base, because all the banking sector customer base is very big, but insurance sector customer base is very less. That's why the insurance sector wants to sell their products through the bank channel. There comes the role or the beauty of this particular bank assurance, and achieve the geographical reach within minimum time, because the banks are there everywhere, but you can't find the insurance companies everywhere. You can go to a particular rural area, you can find a banking branch there, SBI, Canara Bank, according to your this one. But these insurance companies cannot be seen in the in every corner of our country, and ensure higher probability of success in the sales process. So if you want to see that you are going to have the synergy effect, you have to take the help of this particular insurance company. Then what is this particular bank assurance? As you all know, it is a French term. It is standardized mass product that is going to be sold to the customers by through the bank channels by the insurance company. It is very easy to understand and easy to sell. Why? Most of the people who come and connect with the bank, they will be doing with the financial products only. If I have got a SB account, I know my salary will be credited there. And I also know if I leave the money in the SB account, what is the rate of interest that I am going to get. If I maintain a FD account, I will get much more interest. Or I can go for so many other schemes given by the banks, like we have got the RD and all those things. Even if you go to the insurance, they will ask you so many schemes are there and all those things. And today, because of the NPS, most of the people, whatever the money they get after their retirement, that is the death come gratuity amount, they want to keep it in the LIC and they want to get it in the form of the pension. If you get a amount of 40 lakhs or 50 lakhs as a professor at the end of your career, you retire, 50 lakhs you get, you keep that 50 lakh rupees in the LIC, they are going to assure you some 40,000 rupees or 30,000 rupees pension for you. So Jeevan Suraksha plan has been, or Jeevan Vishrant plan, be at 60 what you are at 30. That is the concept or the logo or the slogan that is being taken up by the insurance company to see that they want to attract the customers. And sold though a bank distribution channel, you are going to do. Distribution of insurance products through the bank's distribution channel, that is going to be done. And it is basically selling insurance products and services by leveraging the vast customer base of a bank and fulfilling the banking and insurance needs of the customers at the same time. So you are going to ask him, you are going to have so much of money in your bank, why don't you insure it? Then the customer who is there in the banking premises, he will take a decision. Okay, for my safety purpose only, the banker is telling, let us keep some amount of money in the form of the insurance premium that I want to pay. That's how you are going to get the link between the insurance products and the banking products. And it is very easy when you sell through the bank channel, because the banks have got a very broad customer base. And the bank insurance allows the insurance company to maintain smaller direct teams as their products are sold through the bank-to-bank customer by bank staff and employees as well as. So this particular things is going to be very common because we are going to use the bank customers and the bank staff and the employees. And bank staff and tellers rather than insurance salesperson will be the point of sale and point of contact for the customers. Nowadays, you can see for every bank that you go, some other person will be there as the bank correspondents. Earlier, we had BCs. Now, some people are sitting, they will be assuring you, can I sell the ATM for you? Can I sell the credit cards for you? Do you have the debit cards? Something or the other questions they will be asking. Why? Because they want to see that the customer base and the customers are going to be benefited by whatever the services that the bankers are going to provide. And bank staff are advised and supported by the insurance companies through product information, marketing campaigns, and sales training. So always we see that the insurance companies cannot appoint a lot many clerks, or even whatever the publicity they can give by the electronic media or through the newspaper and the magazines, that is not going to be more competent enough, because you have to see that wherever the financial transactions are going to be taken place, especially like the banks, the marketing campaigns can be conducted, product information about the products can be provided for the employees, and the training can also be given for the sales staff. The bank and the insurance company share the commission. Insurance policies are processed and administered by the insurance company. So you see that the insurance companies are going to depart with some amount of the commission they have to pay for the banks. So you see, for the banks, the synergy is going to be created, and the insurance sector will also get the synergy because they need not make extra effort by appointing the sales people for the purpose of selling their products. This partnership arrangement is going to be done profitably for both the companies, banks can earn additional revenues by selling the insurance products, while insurance companies are able to sell their insurance products without having any extra sales force, for which they have to incur the additional operating cost. So all additional operating cost will be hidden. It will be saved by the insurance company. Only a small part of the commissions are going to be paid to the insurance agents or the brokers. So to improve the channels through which insurance policies are sold, you have to manage and ask them to reach the hands of the common man. What is the ultimate thing? Bank products as well as the insurance products have to reach the common man. That is the end of the day. And to widen the area of working of the banking sector, a wide network of the banking sector is there, customer base is there, and it is going to be done in the nation. So because today we don't have the unit banking concept, but we have gone for the branch banking concept. To improve services of insurance by creating a competitive atmosphere among private insurance companies in the market. Today you can see, earlier we used to go for insurance means it is only LIC only. But today LIC is only the leader, that's all. So many insurance companies are there in the private sector. They are all offering the premium that is to be paid at a very competitive race. They are going to charge lesser than the premium charged by the LIC. So when you are at the age of 26 or when you joined the job at the age of 40 years, you think of, oh, so now I am 40 years. Then the insurance agent will open up the actuarial science. He will take the help. As per the actuarial science, the scientist who has given the probability of the life expectancy and the insurance premium that is to be calculated for every 1,000 rupees, he will calculate how many years this particular person has taken up the policy. He will take into consideration and they will say for every 1,000, this is the premium. For 1 lakh rupee, you have to take up, you have to pay so much of premium. For example, we have got different endowment policies are there, comprehensive insurance policies are there, and Jeevan Bima policy is there. You know the beauty of the Jeevan Bima policy? That is the Jeevan Bima policy. The beauty is for 1 lakh rupee at the age of 27 years, for 1 lakh rupee, you have to pay just 90 rupees. What is the insurance premium? 90 rupees for 1 lakh rupee, the insurance. So for 3 lakhs or 5 lakhs, you take up insurance, you are going to be benefited 450 rupees insurance premium you pay, but you get the life insurance coverage of 3 lakh rupees or 5 lakh rupees. And you can just, you can see that the insurance premium is going to be very, very small. And to widen the area of the working, you see, to improve the services of the insurance by creating a competitive atmosphere, you can see that the private companies are going to operate, and we see cutthroat competition is there both in the banking sector as well as in the insurance sector, and the synergy is going to be created usually. And through this new distribution network, the insurance company significantly expands its customer base, because we are going to use the banking base for the purpose of reaching to the common man. An insurance company can establish itself more quickly because it is their products are being sold through the local banks. The bank sees bank assurance as a way of creating a new revenue because they can diversify and they can sell the products of the insurance company. The bank becomes a sort of supermarket. So where the product is going to be sold, a one-stop shop, because today we have got shopper stop, no? In most of the malls, you see the shopper stop. Likewise, it becomes a one-stop shop for all your financial services need, where all customers' needs are going to be met. And whether it is insurance or it is related to your bank. And revenue diversification is going to be there, because most of the time you get the money from the insurance company in the form of the commission for having sold the products, for having created or collected the money on behalf of the insurance companies, and that amount is going to be repaid to the insurance company, and satisfaction of more financial needs under the same roof is being done. Customer retention and increase in the customer loyalty happens to be the need of the hour, and more profitable resource utilization is there. Enriched work environment you are going to see, and establish sales oriented culture. So you can see that more products of the insurance and the banks are going to be sold in the bank premises. So what are the advantages to the customers? Usually the customers have the following advantages. Number one, enhanced convenience, both insurance and banking in one place. One-stop shopping for all your financial services need. Number three, innovative and better product ranges. You have a plethora of the options that is being given. Lot of the instruments are available for you where you can see that the products are whatever you want, you can have the option, and more credible solution is going to be given to you. And demerits of the bank insurance, the most important thing is data security, because if something happens, you see the entire network is good, their data security is going to be under trouble. You have to see that these things are going to be more secure, and a conflict of interest should not be there, because sometimes the banks also sell their products and insurance companies also sell the products. If the products are there where the duplication of the features are there, then most of the people, they either they go for insurance or they go for bank. So you have to prepare and produce the insurance product or the bank product in such a manner that it is not going to duplicate with the banking or the insurance products. And better approaches and services are being provided. And you have to see that the bankers, the customers are going to provide a better financial services from the customer's point of view. And it is only a win-win situation. Either the insurance company or the banking company, it is a win-win situation. Both of them should win. It is not win-lose situation. So the provisions of the insurance and banking products and the services should be provided through the common distribution channel to a common client. So what are the advantages from the bank point of view? Customer retention will be there. Satisfaction of more financial quality customer access needs under one safe roof. Revenue diversification will be there for the banks. More profitable resource utilization will be there. Enriched work environment is there. Established sales-oriented culture will be there. On the way, contrary, in the insurance companies are being bifurcated. They are going to be under advantages because they are going to have the revenue and channel distribution. Quality customer access will be there. Quicker geographical reach is there. You can penetrate into all the areas where the insurance companies has not opened their branch outlet. Creation of brand equity will be there. For example, Tata, INZ, Birla Sun Life Insurance, or ICICI Prudential, or some other private insurance company, whatever the products that you want to save, you have a tie-up with the SBI, Canara Bank, Punjab National Bank, South Indian Bank, or some other private companies, and you can sell your products as you like, as the product is being prepared by you. Leverage service synergies are going to be there. Bank staff will help the insurance company to sell their product. Establish a low-cost acquisition channel. So through a very low cost, the insurance companies are going to sell the product. What is the status of the bank assurance in India? In India, banking and insurance sectors are regulated by two different entities. For banking, we have got the Banking Regulation Act 1949. And for the insurance, we have got Insurance Regulatory and Development Authority. So Reserve Bank of India is going to take care of the banking and IRDA is going to take care of the insurance. Both are being monitored and there should not be any duplication or the conflict of interest should not be there. And RBI recognized the need of an effective method to take insurance policies reach people of all economic classes, because today we are focusing, Narendra Modi ji is focusing on the economic classes and everyone should be brought under the financial inclusion. So a lot of conferences and seminars have taken place in all colleges and universities relating to the financial inclusion. So all those people who are being kept outside the financial inclusion, they are to be brought under the network of the financial inclusion. At least everyone should have a bank account to avail all the banking government schemes, amount subsidies. For all those purposes, you have to obtain a bank account. You have to have the banking account in one or the other bank. Insurance companies propose to bring insurance products and common man should avail of that. Basic financial point, what is the insurance, how it is going to help them, which is the local branch which is providing the insurance services, everything should be made known to them. In India, major driver of the bank insurance has been the private companies, both in the bank as well as in the insurance. You can find many companies have come up in the banking sector. You have got Centurion Bank, Catholic Syrian Bank, HSBC Bank, ICICI Bank, Grindlace Bank. Like that, we can name so many top banks. And in the insurance companies also, you have got Tatas, Birlas, and other companies who are operating in a big way. RBI guidelines for the bank assurance. Joint ventures will be allowed for financially strong banks, and we can take up the insurance business with risk participation. So always in the insurance, what is there? Risk is there. Risk is to be taken up by the insurer and the insured is to be protected. But who comes? Because that is the question in the insurance sector. For banks that are not eligible for this joint venture option, they can have the option up to 10% of the net worth of the bank or 50 crore rupee, whichever is lower, is made available. Any commercial bank will be allowed to undertake to insure business as an agent of insurance company. This will be on basis with no risk participation. Bank will not take up the risk. So each bank that sells insurance must have a chief insurance executive that is under the IRDA guidelines. All the people involved in selling should undergo mandatory training at the institute accredited by IRDA and pass the examination conducted by the authority, because you should have that particular charisma or the information relating to the insurance products. If you as a sales executive do not understand what is that insurance policy, how you can give that particular information for the customers. So you have to undergo the training under the IRDA recognized training institute. Commercial banks may become the corporate agents for one insurance company, and banks cannot become insurer brokers. So this is the end of it. SBI Life Insurance Company has come into existence with effect. Joint venture between SBI and BNP primarily assurance registered with IRDA on 33/2001. Shareholdings, State Bank of India has got 74% and BNP Paribas Assurance has got 26%. And Canara HSBC, Oriental Bank of Commerce, joint venture, Life Insurance Company Limited, registered on 6th June 2008. Canara Bank holding is 51%. HSBC Insurance holding is 26%. Oriental Bank of Commerce holding is 23%. And we have the Bajaj Allianz General Insurance Company, which has tie-up with the Karur Vaishya Bank. The Birla Sun Life Insurance Company has a tie-up with the following banks: Bank of Rajasthan, Bank of Muscat, Dutch Bank, Catholic Syrian Bank. ING Life Insurance ties up with Vizag Cooperative Bank. Max New York Life Insurance has its tie-up with Axis Bank. So Max New York Life Insurance and Axis Bank have signed a 10-year treaty bank insurance relationship. Max New York Life Insurance, MNYL, this the 7th largest life insurance company in India. Axis Bank is the 3rd largest private bank in India, and to provide customized life insurance solutions to customers via the bank's network. So some other tie-ups in India, the insurance company LIC of India has started the tie-up with the following bank for the bank assurance. They are Corporation Bank, Indian Overseas Bank, Centurion Bank, Sahara District Central Cooperative Bank, Janata Urban Cooperative Bank, and Oriental Bank of Commerce, OBC. And distribution channel, career agents are being appointed, special advisors are being trained, salary agents are appointed, bank employees, platform banking training is given, corporate agencies and brokerage firms have come up, direct response is there, internet facility you can avail of, e-brokerage generating techniques are there. So with the help of the technology, these things have been taken up and the distribution of channels have been cornered up. And SWOT analysis is there. What is the strength of the bank assurance? Vast untapped market, because India happens to be a very big market and huge pool of skilled professionals are available. You can see in the most of the younger generation, they are becoming the insurance agents or they are taking up the job in the banking activities. They are working as bank managers, some in other designations and all those things. And they are also, for example, an MCOM graduate or a BCom graduate with the understanding of the FICO language, he can work as a software professional helping in the stock exchanges and having the association with the foreign banks, and he can work as an associate consultant there. So huge amount of salaries are being paid for those particular people, ranging from 12 lakhs to 16 lakhs. I had the opportunity of interacting with one of the executives where he was telling he was MCOM from Tumkur University and he is getting a salary package of 16 lakhs. I was telling you what you are going to do because you don't have that particular amount of software. Then he said, no, sir, we can understand those things and we can learn that particular language also. However, it is going to be a personal effort, or if the core competency has been acquired by a particular individual, the things are not very far-reaching. So huge pool of the skilled professionals. Weakness is lack of networking in our countries. Bank branches, as always, they will say server down, server down, network problem, like that they will be telling. Saving ability among the middle class is very low. Opportunities are there. Data mining, it is becoming a big work for the youngsters today. And we have the data science in the computer engineering, where they can learn these things and they can help for the purpose of creating the retrieval of the files and all those things. Data customer database can be maintained. Wide distribution network is also possible. And the threat is the human resource challenges. Wherever you see HR problem is there, you have to face that. And non-response from the target groups, that is also going to pose as a challenge. So, dear participants, with this, I am going to close my end of this particular presentation or the deliberation relating to synergy creation through the integration of the insurance and banking sector, bank assurance, and the end of the reverse mortgage. Now the house is open for discussion. Whatever the questions or the doubts, it is there, you can share with me. Suresh sir, I am audible?
Yes, sir.
Sir.
Yes.
Good evening, sir.
Yes.
Yes, sir.
Indeed, it is a very relevant concept, especially for the teachers like us.
Okay, sir.
And the first topic with respect to this reverse mortgage.
Yes, sir.
And those who are, at the verge of retirement and so on, it is very much useful where they can avail the facilities. So it's a wonderful topic. Thank you for, offering this kind of a wisdom of knowledge.
Okay, thank you, sir. Thank you very much. Chaudappa is there?
Yes, sir. Yes, sir.
Chaudappa.
Yes, sir.
I can see your face.
Yes, sir.
Well, because you will be coming and living, no? That time I saw your face.
Yes, sir. Actually, both sessions are wonderful, sir. Really,
Okay.
reverse mortgage and bank assurance, both topics are very wonderful and relevant topics, sir, for us. And
Okay,
it is
thank you.
It's very fruitful session, sir. On behalf
Okay.
of HRDC, UGC-HRDC Mysore and participants, I wholehearted thanks, sir.
Okay, thank you very much.